Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Aussie dollar US dollar FX for Monday, May the 28th, 2012. Well, a continuation of the trend to the upside today, a candle with a higher high and a higher low. 2 trading periods ago we saw a change of trend with a candle that made a higher high and a higher low. Previously a very strong downtrend in place. Then an inside bar where we had a bar with a candle with a lower high but a higher low, which raised some doubt about continuation of the trend to the upside. That change of trend to the upside began on an indecisive spinning top type candle, which did raise some doubt. And today, a good solid confirmation of the change of trend, with the high extending a long way past the previous high. The close has closed at a fair way above the previous close, so the buyers have shown some keenness in today's market, and we have a white bodied candle which suggests that the buyers made some net bullish progress, and a decent amount that we haven't seen over the previous week. So it seems as though the buyers may be supporting this rally. Having said that, however, the buyers have only just closed up above the midpoint level, so closer to the midpoint level than the high. So that suggests that even though they have control, it's not terribly strong control. And we have a shadow on the top of this candle, denoting the buyers losing commitment up around the high, and that coincides with the area at 98.59, which was a previous area of support, which is now acting as resistance to this market, so an important area moving forward. You can see the current candle as it's developing that we're seeing the price action rejected from that 98.59 level. So moving forward, if the trend is going to continue up, we do need to trade up above there. To the downside, if we do see this market sell off, then obviously we have very strong support down around the swing low around 96.88, and then at 96.62, which was an important area of previous support as well. If the market does continue to rally through the 98.59 level and above the previous high, then we do have very strong resistance at the round number $1. And we saw previously, as the market was selling off, when the market was attempting to rally, the buyers continually lost commitment as they were testing quite near that level around 99.50. So there should be some very strong resistance as we approach those levels, if we do for tomorrow's trading. Now, just looking at the Fibonacci extension, and what we're looking at is the extent of the current upswing that the market is trading in compared to the previous time the market was trending up. So the previous time the market was trending up was here a couple of weeks ago, and we had an uptrend that lasted for one candle, and then the trend changed, and we're looking at a Fibonacci relationship there. And what we have is an extension of that upswing. We've moved past the 100% today. The market found resistance at the 100% previously, but today the buyers have had enough momentum to trade up to there. But we've seen the sellers coming in around the 161.8% level at 98.86 today, and that coincides pretty much with the high of today's trading. And the extent of selling is exhibited by the shadow on top, so there is a very strong possibility that we could see a change of trend in this market today because of that important 161.8% level. In terms of the Fibonacci retracement of the previous downswing, now that the market's in an upswing, we have also seen the buyers lose commitment at the 38.2% level. So that's very important for this market moving forward, where we see that price rejection from there. So both of these Fibonacci calculations are suggesting that the buyers may find quite some resistance around these levels, and if we see any selling coming in, then there is a good possibility that the trend could change. So we do need to watch the low of the current candle, which is at 97.96. Now, having said that, we don't have any evidence to support that at the moment. We have a candle with a white body, so the buyers have made net bullish progress, and they have closed with control, so we haven't seen any strength from the sellers yet. But if we do see strength from the sellers, if we take out that low, there is a strong possibility we could see the market testing back down to the 96.89 level. In terms of Ichimoku, as with the Euro US dollar, we have a market that's bearish in the long-term time frame by trading below the cloud, bearish in the medium-term time frame by trading below the Kijun-sen, and neutral in the fast-term time frame by trading at the Tenkan-sen. The Tenkan-sen, as I've mentioned very often, is usually when we have a very strong downtrend in place. It's usually the first place where we see resistance, and it usually holds as an area of resistance, and we have rejection from that area, so we do need to be aware of that. If we look at the slope of the Tenkan-sen over the previous couple of weeks, it's been pointing down very sharply, reflecting strong downside momentum, and once again we've seen the market attempt to trade through there, coinciding with the 98.59 level, and rejection to close right at that level. So moving forward, we have this confluence of very strong resistance at this level. It makes the low of the current candle very, very important for a potential lower high and lower low, and evidence of that change of trend to the downside would be taking out that low and would set this market up as a potential sell. In terms of the ticker span, that's below the corresponding price action, so it's confirming the bearishness that we're seeing in the long term and the medium term time frames. Now, just considering the Kijun-sen, however, that is still pointing flat, and whilst that points flat, there is still a possibility that the market could rally, so we do need to be aware of that. So it makes this 98.59 level very important. That's a very strong level of resistance, as I've said. If we do trade up through there in a bullish manner, and especially above the previous high, then there is a possibility we could trade to higher levels. So our levels that we've been made aware of become very, very important for this market tomorrow.